Financial stability actually means being in a position in your life where you know that you don't have to worry about your basics. So you don't have to worry about your rent. You don't have to worry about your feeding. You don't have to worry about your children's school fees. You don't have to worry about the basic things that makes life livable. Inflation is not just the increase in the prices of goods and services. Inflation is also the reduction in the value of your income. What is a sign of wealth is assets being far above your liabilities. That's all. If I'm speaking to anybody who is trying to get a house in this day and age, save up aggressively. Try to take your time, pay off your rent, and little by little save up to a point where you can get at least 50%, 60% of the value of that house. If you can do 100, do 100 and know that all you have to think about is just property taxes or council tax, and that's all.
Getting the key to your own home is a dream for many, yet with mortgages stretching across 25 to 30 years. Is property ownership a stepping stone to financial freedom or a long life financial commitment that holds you back? Joining me today is a wonderful guest all the way from United States of America who wears two powerful hats, a personal finance educator and an accountant. Together, we are diving into the topic of mortgage, freedom, and financial burden. Knowledge is a source of strength. The aim of my guest is to provide empowerment to all individuals living in the States, regardless of their immigration status. Hi, everyone. Welcome back to Wisdom for Exploits. With me, your host, Bola Amore. Today, we have a wonderful topic, as I said, but before we dive into our discussion today, please do not forget to subscribe to our channel and click the notification bell to be notified whenever we upload new videos. And make sure you comment. Please comment. Thank you. Over to you, my guest. Please introduce yourself.
Oh, thank you so much, Mrs. Bola Amore. It's such a privilege to be here. Thank you for reaching out for this particular interview. It's a privilege, and I do not take it for granted. My name is Victor, and I'm a Nigerian, just like Mrs. Bola. And I moved over to the United States a couple of years ago, and I've been an accountant for more than 5 years. And so I delved into finance. I delved into investing because I discovered that when it comes to finance, you can be an accountant, you can be a tax professional, you can even be a PhD holder, you can be a doctor, a nurse, or any career. But finances is something that most people still don't fully understand how to navigate. And I'm not going to be saying this because I just want to say it. It's because I have experienced it. I've been in situations where I got into certain very, very nearly, interesting situations because of my financial, should I say, how I manage my finances. And after opening my eyes to these things over the past few years, I discovered that a lot of more people need to know this information and need to understand how to separate emotions from financial decisions because they don't work together, even though people usually put them together, right? So I started to study about it. I started to really delve deep, and I came up with structures and systems that can help people to make better decisions financially. So yes, it's an honor to be here, and I'm grateful.
Wonderful. Thank you so much for honoring this call. I'm so grateful. As I said to all our viewers before I ask my guest another question. Yeah. So my guest is based in the States, United States of America. So most of this discussion about mortgage and financial freedom is going to center more on people that lives in the States. So I know the second episode of this Money Matter issue is going to come up. Then I will bring another person that will talk about the bigger picture from the UK perspective. Thank you so much. What inspired your journey into banking and finance and ultimately into, personal financial advisor?
Yeah, it's actually my wife. My wife was encouraging me, telling me that we were in a situation at the time where God was beginning to, be kind to us, and we really needed to make sure that we didn't make mistakes. We know where we're coming from. We know some of the call it mistakes our parents made. And so we were trying to be very intentional. So she encouraged me to go into studying more about finance because she believed that I had it in me, right? I was an accountant. I was okay being an accountant and a tax professional, but she was like, Victor, why not go into finance? And so I said, okay, how am I going to go into finance? They say when the student is ready, the teacher will show up, right? So all of a sudden, a friend of mine from Ghana called me and told me, Victor, there was this person I've been seeing online. This person is into investing. His name is Dr. Hans Boateng. He's Ghanaian, but he also lives in the US. And I was in Nigeria at the time. And she said, I would like you to connect with him. This thing about investing is really cool. I was like, oh yeah, my wife has been telling me this. So yeah, let me connect with him. So I connected with him and registered for his program, took all the trainings. And then I figured like, Jesus, what have I been doing here since,
Wow.
And that was when I went deep dive. I started to read books, started to go through YouTube videos, started to really dive deep into the world of finance. And the rest is history, as they say.
Wonderful. That's a good one, Yeah, that's a very good one.
Mm-hmm.
So, as I said, the topic before us today is mortgage, freedom, and financial burden. So, my question now is that many people still own a home as a major part of achieving the American dream.
Yeah.
But is home ownership always a sign of financial success?
The answer is, at a particular point in time, it was a sign. Okay. But the world we are entering into right now, things have changed, right? Things have seriously changed. And even though we don't have so many alternatives, the truth is that a home currently, and in my opinion, is no longer a sign of financial success. It was a sign for maybe our parents who came abroad maybe 20 years ago. If they had the money and they got a home at that time, we could call it a sign, because at the time it was easier to get a home even with a medium salary, median income, but things have changed. And the thing about the world is that the world is always evolving. And as humans, we should also evolve. And so if we still get stuck in the ideology that home ownership is a path to financial freedom, in this current day and age, what we are going to do is that we're going to trap ourselves into an illusion that when we finally get out of it in years to come, we'll be disappointed. And so the data is not saying anything close to the fact that home ownership is a sign of financial freedom. And I can go into that if you want me to.
Yeah, that's fine. But what about people, because sometimes, especially in this part of the world, which is, I know we're talking from the American perspective now. But here in the UK, sometimes people, when you don't own your homes, a lot of people look down on people so much because maybe you are renting. And I've come across majority of people that are renting are doing really, really well financially, even more than people that said their homes, tens, property, 100 properties, and so on and so forth. So why is it that people have this mentality or mindset that when you don't have a home, you are a poor person, you are a pauper? Why is that mentality?
It's because of where we are coming from as Africans, especially. An average Brit or an average American, like I'm talking about, like the other race, they don't necessarily see that as a sign of wealth. They see it as a sign of stability, just financial family stability. We're trying to create stability for the family. It's not because we want to sell the home and become rich. Their parents, for some of them who were lucky, their parents already built wealth for them. And the economy has been working well for them for years. Now, we came from a country, from Africa. Most people came from Africa or from maybe the Caribbean, where the economy wasn't as good as the United States or as good as the UK or as good as Canada. And so we were denied the opportunity for home ownership with a median salary. So back home, we didn't have things like a mortgage system where people could use their 250,000 naira salary to go get a house, right? Yeah. So we come into this country and all of a sudden we hear that you don't have to be earning millions to own a home. You can just own a home with as little as XYZ, and we just jump into it. So that particular information spread across the community. And so that's why most times when we immigrants come into countries like the US, the first thing in our mind is, I was denied being a landlord in Nigeria. I was denied being a landlord in Ghana or in any country. You know what? Let me now become a landlord here where I know I own my home and I can rent the basement. Or let me now own my home because that shows I have arrived. So you see Africans doing home openings and all those things because it's a signal. Like what you said, it's a signal because it carries an emotional satisfaction that my hard work is paying off, because now I can look at a building and call it my hard work. But of course, as I said already before, it's no longer the way it used to be.
Okay, thank you for that. So before we talk specifically about mortgages, what does financial stability actually mean? Is earn a good salary enough?
Financial stability actually means being in a position in your life where you know that you don't have to worry about your basics. So you don't have to worry about your rent. You don't have to worry about your feeding. You don't have to worry about your children's school fees. You don't have to worry about the basic things that makes life livable, right? You wake up in the morning, you can go to work, and whatever you earn at that level is able to take care of your needs. Now, at that level, you are past what they call survival, right? Because survival is when you are below that level. When you are below the level where for every rent, you are already overthinking, where is the money coming from? When you want to pay, groceries, you are wondering, should I go and borrow? Or should I go and get this pay small system? That means you are not yet stable. So financial stability comes at the point where you have moved above survival level. Now you are able to make decisions with dispensable income, or I call it discretionary income outside of your basics that you take care of every single month. That is where you arrive at some level of financial stability, but it grows over time.
Okay, thank you very much. All right, we're going to earning more does not always mean being financially secure.
Yeah.
Many immigrants work extremely hard to secure good job and increase their income.
Yeah.
Why is earning a high income necessarily the same as achieving financial stability?
It's simply because of the economy. We have what we call inflation. Inflation is not just the increase in the prices of goods and services. Inflation is also the reduction in the value of your income. Okay. So if you could buy a basket of apples with 50 pounds, you're in the UK, in the US, $50 this month, and then next month you now need 70 pounds to buy that same number of apples. That means that your income is losing value. So even if you retain it at that level, over time, you will start to slide back into survival, even though you are working hard, but you're earning that same income. So that is why people have to intentionally look for ways to always increase their income. And it's not as though it's easy. That's why there is something called financial discipline. So you don't have to just buy everything you want and you hope that your income doesn't finish, because you might even try to increase your income, but then nothing is promised, so it doesn't get increased. So, but inflation is definitely going to go up. It's natural. The curve continues to go up. So you have to tell yourself, you know what, I need to live within my means while I'm working hard to increase my income, even though I know that my expenses will continue to go up over time. So the goal is I need to make sure that while I am working towards increasing my income over time, knowing that my expenses is gradually going to rise to meet my income, I need to make sure the expenses is not rising faster than my income is rising. That's the goal. So as immigrants working so hard, just watch that number. There should be a positive number when you deduct your expenses from your income. If it's zero, then there is a problem. It means you're living paycheck to paycheck. If it's negative, it's even a worse problem. It's more of a problem because you are now in survival. But if it's positive, then it means you can use that extra to do something for yourself and your family.
Yeah, but what about in that case that, every month is not the same?
Yeah.
Sometimes. Yeah, some months you might spend lesser, even though you had a budget. But the expenses might be more. What about in that case, whereby the expenses are more, especially the economic issue going around? So how do you know that now I'm balancing, I'm not living from paycheck to paycheck? Because that's my next question. You know that you can have a good job or paying them, you get paid with a good job, but still living with from paycheck to paycheck.
Yeah, like I said, there is a connection between our personal desires and our income. We have a tendency to increase our there's even a law for it. Forgotten the law now, but there's a law for it. Your expenses naturally would rise to meet your income. So even if you are trying so hard to discipline yourself, you can't stop yourself from seeing some nice things sometimes and you want to buy it. And sometimes those things are even necessary. Maybe all of a sudden a couple has a child and then they really need to, take care of that baby, and then the money to take care of the baby is not really enough what they have, So that tells us that, okay, it means that I need to be very, very strategic with how I plan my finances. I need to assume that in certain months of the year, things might increase. So that's where we bring about emergency funds now. Things might come and I need to save ahead of time for it, because if I don't save ahead of time for it, I'm going to be caught unawares. And I don't want to be caught unawares, especially in countries like this. So if you find yourself in a position where your expenses increases, without your knowing, then it just means that you have to be more intentional with planning your finances ahead. To be honest with you, if I work in the UK and I'm earning £3,000, or I work in the US and I'm earning $3,000, I technically shouldn't be living in an apartment that is being rented for, say, 1,200, because already I am working on thin edges, especially if I have a car and I have to fuel the car, and I have maybe a family I have to take care of. 3K is obviously too small. So you have to make sure that you intentionally discipline yourself, right? I don't need to be in a 2-bedroom. Maybe I need to be in a 1-bedroom, or I need to be with somebody, shared apartment. And it's not easy, but that is what we just need to do. If not, your expenses will rise and meet the 3K, and it will now start entering into negative. And that's why a lot of us go into debt.
Okay. Anyway, that's a good one. But I need to say something regarding that.
Yeah.
You see, if somebody because the way it works in UK is that when you're renting, and you have 3 children, they put those kids into consideration. You understand, the landlord put those kids, or the estate agent put those kids into consideration. They said to you, is they are overpopulation, over whatever they call overcrowded. That's the word. They're overcrowded. So if somebody is earning £3,000 and want to rent a house of 1,800, I think that is the least, and it depends on the area. You too, even in the States, area varies. There are some areas whereby it's cheaper, and there are some area whereby the price is quite high. So with that, if somebody have 3 kids and they have no choice than to rent a 2-bedroom, I know you might be thinking that, okay, can't they go to another city to get a job? What if what they can get is where they are at the moment? So how can they navigate that?
No, even getting the 3 kids is actually also part of the problem. Like, you don't have, you don't just have kids because having kids is good. You have to be looking at the income, and you don't want the kids. You are obligated to take care of your kids when you have them. So you don't want to birth kids into the world and then bring them into struggle. You want to make sure that for every stage, before the second child comes, you have planned for how that child would add to the first one that came, But then for the example you gave, you have 3 kids, and then UK will say, okay, you know what, you need to be in a 2-bedroom because of overpopulation issues and all that. Then it means that you have to you will need some sort of support from somewhere, and that's why they go into debt, like I said, because if already more than 50% is going into rent, you are more than likely going to have to go into debt. You get, and then we know how interest rate works. So if it was in Nigeria, I could say, oh, just go and live somewhere and then using bike or keke every morning. But here, you know how it is. Everything is very structured. So you can't be living in Bradford, for example, and then maybe you work in Manchester, and then you say you want to move to Bradford to go and work, or you want to stay in Bradford and work. The work might not be in Bradford. You have to come to Manchester, and if you move to Manchester, then the rent becomes 2.5. Exactly. And then that's like 70% of your income already is gone. So it's almost like the only option you have is I must have to make sure that I sacrifice. You get? If it means the council does not have to know, or the estate agent does not have to know, and all those things, I need to just manage myself, explain to them that, look, this is my income. Unfortunately, I have 3 kids. I didn't know, and I cannot give the kids up to the government. I need to take care of them. I just think you need to go and stay with somebody.
Buy
It can
one,
even
get
be
one free.
buy one, get one free. Exactly. You know, and you know, we Africans, we have this issue where sometimes when we come abroad, it's difficult to live with each other for a long time. But you know what you are, you know your targets, you know your situation. So if a friend says, come and stay, and you know that friend will collect 1,000 and give you maybe 2 rooms in their 5-bedroom or 4-bedroom, accept it, because and deal with whatever comes after, because you know what your plans are, and you don't want to put your kids under unnecessary stress. You know.
That makes sense. That makes sense. So when we look at financial success, yeah, should we redefine success beyond owning a home,
yes,
driving a luxurious car, or earning a high salary?
I love this question. In fact, I know it sounds cliche, but the truth is that financial success has nothing to do with owning a home or driving a luxurious car, or even earning a high income. To be very honest, the real my mentor will always say something like, the real wealth cannot be seen. Like, if I look at you, Mrs. Amure, can I tell if you are wealthy just by looking at you? Except if maybe, in fact, if you wear, you know how musicians do, they wear their gold chains, they wear all those, that's signaling that I am wealthy, but that is not wealth.
Yes.
That is not wealth. The real wealth are things that you can't see. I can't see your bank account. I don't know if you have shares in the UK stock market. I don't know if you have 40 real estates. Now, even if you tell me, can I see it? Unless if you start taking me to the place one by one. So the real wealth, being financially successful, has nothing to do with owning a home. It's actually getting to a point in your life where your assets are far above your liabilities. Because your assets are the things that build you wealth. And assets, and even though a home, like a house, is an asset, if you look at it from the paper value, is an asset. But how you go about owning a home, or what you do with the home, will tell whether it's an asset or a liability. I'll give you an example. If I go for a mortgage and the mortgage is taking 70% of my income, and then I'm living on thin ice, that house is a liability to me.
Sure.
Even though it's an asset, it's supposed to be an asset, but I have turned it. What I'm supposed to do is to rent the rooms out and go and live in a self-contained. Then it becomes an asset to me, right? I don't have to say, no, I need to live there. Let them know I'm the landlord. No, you don't need to live there. Nobody needs to see you as a landlord. Just get your rent and do your stuff. So driving luxurious cars is even another extreme route, because a luxurious car means it will always be burning cash, right? A luxurious car will burn fuel faster. The maintenance will be very high. A little scratch and they are calling thousands of pounds or thousands of dollars. Now, does it mean that you should not have a luxurious car? The answer is no. But is luxurious car a sign of wealth? The answer is also no. What is a sign of wealth is assets being far above your liabilities. That's all. That is financial success, where you have enough assets that your liabilities have no way of coming close to them in terms of the level. You understand what I mean? So if I can be earning £10,000 a month, in fact, I know somebody who called me who earns somewhere around $7,000-8,000 a month, but she's still under financial stress. And you know the reason? Because her mortgage alone is already taking 50% of that salary. And then her kids are also growing and they are going to school, and it's costing her money. So she's now asking me, Victor, what do I do? But you and I know that 10,000 is a lot of money.
It is.
So it's just the decision. How do you make your decision? So you can see that although she has high income, she's still almost living at survival just because of decisions.
That's a good. I think sometimes people love to, I don't know, maybe we call it show off, maybe I use that word, show off. Because kids will always grow up. I'm not saying that the kids they shouldn't live comfortable. We did mention it. You see, if somebody is earning $10,000 or £10,000, you don't necessarily need to go and buy a property of 6 bedroom.
Mm.
You
Just
understand?
because you can afford it.
Yeah, because you can avoid it. Because anyway, we're still coming to that questions, about when you enter into mortgage, people don't
Yeah, how
look at
to
what
go
is
about it.
behind, behind the closed door. So because you buy 6 bedroom, number one, the kids, they will grow up. When they grow up, you have to start looking at downsizing, as they call it.
And you might not be comfortable with downsizing. I mean, after tasting what is above,
Exactly. Because I remember a woman of God, I think she relocated from the state as well to the UK. And when they came, the kids were still young. They bought the big property. And later, there was like, the kids are in university now. They need to downsize. And she said by the time she started packing, all the Ghana must go was just falling apart, because too much stuff, But they still have to downsize because they were like, oh, all the kids have left the home. What else do we have to do? You understand? I've seen some people, they will say, oh, the kids have left the home. The grandchildren are coming.
They are coming, so let's retain the house.
Exactly. But what about if they are not in the same country? Or maybe some of the kids said, okay, we don't want to stay in UK, we want to relocate to the US, or want to go to Australia, So the house is just going to be there. It's just a waste of... Anyway, so that's from my own angle, that is a waste of time. You can just get something comfortable, because the kids will always grow. And by the time you open and close your eyes, you see the kids, they're already... Exactly, so quick.
Yeah.
I'm going to know where is the time. Yeah, that's a good one. So we're looking at family responsibility and financial pressure now. Many immigrants feels, not as I said, where both the immigrants and non-immigrants. You understand? Because a lot of people are still in the country, not the new immigrants coming in, and they're still struggling one way or the other. A lot of people got their home and they've lost it because of lack of management. So many immigrants or non-immigrants feel a strong responsibility to support family back home. How can immigrants and non-immigrant balance supporting family back home while still building a strong financial foundation for themselves and their families?
Oh, it's not an easy one. It's not an easy one, to be honest, because we are
it means a lot, isn't it?
Yeah, we're actually Africans, and we believe in that support system. They call it black tax, and then some people try to sound
African. Like. What about Caucasian people as well?
Yeah, I mean, when I say African, sorry, it's because I'm biased towards the conversation. That's why. But yes, I'm talking about like naturally black tax across all communities. Kind of is something, and everybody needs to a certain degree support whoever is back home. We can discuss the part where the person back home becomes entitled. That's a different thing. We can discuss the part where the person over here feels like they are the savior that have come to save those back home. So they shut down their lives and focus on supporting those back home. Those back home become so entitled that by the time the person here is now figuring out that, wow, I think I've raised entitled people back home, it's too late because maybe their health has been impacted by working around the clock just to support those back home. So what I would recommend is, if you have people back home that you want to support, just make sure you are very honest with them. You don't have to feel the pressure to support them, because the truth of the matter is that if something happens to you today, they would move on. And moving on does not mean that they are wicked. Moving on is just the natural law of life. They will move on to somebody else who will probably be, because the truth is they will always need something. And so if you cannot provide it, somebody else will provide it. As Christians, we know this thing where God can be ministering to you to do something, and then you are delaying. Before you know, somebody else will start doing it. Exactly. Because his assignment will go on. If you don't want to be the vessel, he will just change vessel. So you just have to realize that, okay, I want to support those back home, but I need to be above water first. I need to understand where I am. And then I need to plan for what could go wrong, so that your support for them does not become a burden on you. I'm sure, Mr. Amuri, I'm sure you fly a lot. So imagine you're flying. When they are telling you about the oxygen, they tell you, even if you have a child, put your own first before you put for the child. Yeah, because the moment you are putting the one for the child, you can probably be halfway. Then the plane is now somewhere else, and then we lose 2 people instead of losing 1. So So the whole goal is save yourself first, get to a level where you know that you can support, and then be very honest with them. Listen, this is what I'm going to do. Some people want to support people as though they are supporting babies. No, you tell them that, see, this support is meant for a business. If I don't start seeing things coming out of that business within this time frame, then I'll know you're not serious. Because some of them, to be honest, and I'm saying this because I was like that. My mom was in the US and I was back home in Nigeria, and she was supporting me in school. And, it got to a point I was always waiting for the support instead of telling myself, okay, the previous one she sent, what did you do with it?
That's true.
And so I saw that I became entitled. So we just have to, people abroad have to watch for entitlement from the people they are supporting back home. But if it's the topic of supporting, you have to support, because we know how the economy is back home, back in both Africa, in Asia, in Europe, wherever you are, as long as you are the one who, financially speaking, you are doing very well. Try to support them, but make sure you have a plan and be honest with them so that they don't become entitled. That's just it.
That's wonderful. That's a wonderful one. And I think the most important thing is that the people you have the most responsibility to are your parents. You understand? If we want to go back to the scripture that the Bible says we should honor our parents, once you honor your parents, I'm not saying that our siblings, those ones are secondary. Like you said, we still have to support, but not at your own detriment.
Yes.
Yes. So you still have to support, but wisdom. Wisdom. Yes. Because sometimes a lot of us that are in the Western world, we try to show off, like we keep saying, showing off, feeling bragged out, everything is fine. And people you're supporting at home, they are doing well. And you're struggling.
And you're struggling, but you're still trying to keep up. Yeah.
Then I remember one of our friend was telling us, he's in the States, and he was telling us that one time, this was many years ago. This is about how many years ago now? 17 years ago, I'm talking about now. So he was telling us that his friend went to Nigeria. So he went to Nigeria. He married a Black American lady. So he went to Nigeria, and all his life, he's a medical personnel as well. But all his life, he's always been riding a second-hand, car,
right.
And he went to, every time people call him from Nigeria, he will send money. They will say, oh, brother, things are not good. I'm talking about 17 years old. It's not even as bad as it is now. And he will quickly send money. Then one day, now said, it's been a while, he needs to go and visit home. He went home, and all the people that were saying, oh, uncle, we didn't have food to eat. Uncle, we didn't. He saw the kind of car they were riding. Jeep. Exactly, Jeep. Living in a nice house. And he, a medical doctor, is using second-hand car since he's been in the States. He has never bought himself, according to this our friend that was telling us, he has never bought himself one new car.
Just because he wanted to support them. Yeah.
No, just because he wants to support them, and I don't think maybe he sees it as a real thing. Some people don't see new car as a big thing, Yeah. So when he now get to Nigeria, he saw them, was like, what? Me that I'm a medical doctor working out, I've never even ride a single new car. You guys they're living very fine. And these are the people that will call them uncle. Oh, there's no food in the house. Oh, they are dying. This, that. Long story short, he came. So when he get back to the States, he went to the car dealer. He went and carried a brand new car. Bought one for himself, bought one for the wife. Then the wife was wondering that ever since our husband came back from Africa, he has changed. What went wrong? Is his mental health okay and all that stuff? The man refused to talk. He now went and talked to his friend and said, please, you need to talk to my husband. Something is wrong. Because he came, as soon as he came back from Africa, he just went to the car dealer, get a new car, did everything, start changing new things. And they said no. Then the man said to them, he said, you know what? These people, they can put you into mess. All these things they are telling you is a lie. I'm not saying some of them are not in that thing, but look at that. they were doing well. He himself that is working very, very hard, 24/7. You know the way medical people work, they can walk around the clock. So the wife, he said, no, they now said to the wife, your husband is not insane, because they couldn't say to her. They said, you just feel like, he wants to treat you well. He wants to do this well, So that is it. So sometimes we need to look after ourselves, especially. Yeah. Yes, exactly. So we're going to credit and financing and debt. Americans make it incredibly easy to finance almost everything, from cars, homes, to furniture, holidays, and everyday purchases. When does financing become a useful financial tool, and when does it become a financial burden?
It's a very deep question.
And you see, actually, everything you see, this question relates to UK as well. Trust me.
Yes, I understand.
Because even here, they'll tell you, buy now, pay later phone, buy now, pay later your cushion, your chair, your whole house, everybody, even the massive TV you're watching is by some. I'm not saying everybody.
Yes.
Buy now, pay later.
Buy now, pay later, yeah.
So that's why some people, you enter some people and say, wow, how come your house looks so nice? But everything
is buy now, pay later. First and foremost, we need to understand that we live in a credit-based system, both in the UK, both in Canada and the US and some other part of the world.
Yeah.
And that credit is what is running the system.
Yeah.
If people stop taking buy now, pay later or long-term financing products, the system will crash.
It's true.
But the funny thing, the people who run the businesses that power this system, they don't use buy now, pay later products.
They don't.
They don't even like it. But, we live in capitalism. So capitalism says that the rich will keep getting richer and the poor will keep getting poorer. But so the goal is the economy has gotten to a point where people have funded the credit-based system so much, they have funded regulations so much that you can't stop it anymore. And it is feeding off the desires of we humans. The natural desire. You go into your friend's house, you see a 75-inch TV, and you're like, am I the only one who should be using 20-inch when I can just buy now, pay later?
Imagine.
And the buy now, pay later is also like, the way they designed it is also attractive enough to bring you in. Because, some buy now, pay later products don't even have interest attached to a certain level. And then at a certain level, interest starts to count. Maybe if you miss a monthly payment or something. And so that is almost like a bait. They draw you in and then you fall into it. You miss a payment, then they charge you. And everybody at some point or the other has to use it. You cannot avoid it completely. Whether it's through a car or it's through a house or it's through furniture or it's through something, must definitely lead you into getting a buy now, pay later product. But the challenge is when you are now being trapped by it. And then, of course, like we said already before, when your liability starts to go higher than your assets or the income that helps you to fund your assets. So how to navigate it is to have a financial plan. I use some buy now, pay later products. But guess what? Let me just tell you, for example, now my credit card, I try to make sure that I pay off my credit card every single month.
Every month. That's
to avoid interest. Now, how am I able to do it? I feel like part of it is because I am lucky that I don't have a lot of people depending on me. My siblings are also here. And I know some people are not like me. Maybe their siblings are back home. So they have they can't do the same thing I'm doing. But then if you can for credit card, if you want to avoid the interest, try to use it, but pay every month, because using it also helps your credit system. I said we're in a credit-based system. So using it means your credit will definitely be improved over time, and it helps you to get better products. In quotes, better. Better means, more credit. But then it improves your credit score. So just have a plan for how to access the product, but pay it in a time frame where it does not become a burden, which leads us back to living below your means or living within your means. They say cut your coat according to your size. The credit-based system leads people into living above their means. But then, while it is good to be able to improve your credit score, it also becomes a trap when it starts to make you live above your means. For example, somebody who is earning £5,000. You take a buy now, pay later product of where by the time you put everything together, it is maybe £20,000. And then you know every month they'll tell you you're supposed to pay 350 every month. It looks small, but then they spread it and it's 7 years or it's 6 years. And then by the time you calculate the interest, you have paid double of that thing that you collected at 20,000. So you think about it, do I need a big screen? Do I even need a TV? Maybe I can start with a laptop and then be managing it because the laptop might even be buy now, pay later. Even phones are buy now, pay later. So
contracts.
How many buy now, pay later products do I want to have around me? You still have your bills. So your income is your most important, should I call it the most important factor to consider even when going for buy now, pay later products. It should define whether you need the product or whether you just want to live like other people are living, And because some people are using so much buy now, pay later products and they're not telling you, like you said, you visit them, you see their comfortable house, you say, no, I deserve better. Then you go into the trap. And trust me, when these companies trap you, you almost cannot leave that trap. It's normal because you are the product. They need. No company makes money without charging you interest. Most of these financing companies. So if they even offer you a product that gives you a window of no interest, take it by all means, but stick to that window so that you don't become the product to the company. Because of course, out of 10, about 7 will definitely fall for the trap. But you want to be amongst those 3 that can stay within the window of, low interest or no interest at all. But if you have fallen into the trap and you're looking for a way out, then that's where you now have to start discussing how to aggressively pay down your debt. And, you have to scale down on a lot of things just to pay down your debt. Yeah.
You see, this issue of debt trap is so easy. I remember many years ago, because I would not say I'm not getting a buy now, pay later stuff as well. Because sometimes you be thinking, maybe it's 12 months. Yeah, you pay it off. And if you're disciplined, even before that 12 months, within 6 months, just clear it.
You pay it off, yeah.
Just say, I remember that time I was still single. So there is this on my fridge. That fridge is so ridiculous. So sometimes when I just come back from work, you see the fridge will stop working. I will lay hand on this fridge. I'll say, you must walk in Jesus' name. It will start working again. I'll say, praise God. I did that for about 3 times. When the fridge got broken, I did that. I said, I lay hand. I said, you must work. I don't have money to pay now. To go and buy a new one. Then one day I came back. The fridge didn't work. I lay hand, nothing happened. You understand? Somebody has already said to me, because I said to myself, I said, you know what? I don't like credit card. Because I've had a lot of story about credit card. I just want to live beyond my means. And the lady said to me, one of my friends, he said, how will you build your credit? And this is where I'm coming from now. How will you build your credit if you don't use credit card to buy stuff? So I went to Curry's, I get a new fridge, I use my credit card, I pay them. So now the question is, why must we buy on credit, or why must we use credit card? Because even as I'm talking to you, there are some people that doesn't have credit card. My husband doesn't have a single credit card. You understand? But some people, you see them, they have 10 credit card, 5 credit cards.
Yeah.
And I'm like, how are you guys managing this? How are you coping? Because even with one, some people are still struggling to pay off their debt. So must I buy on credit? Must I get credit card for me to build my credit? What if I decide that, okay, like Nigerian system, we don't have credit card when we're growing up? Yeah. If our parents want to build their houses, who is going to give you? I know now things have changed. People do mortgage as well in Nigeria. You can buy property from Nigeria and do mortgage, I think people from the state, they give you 3 times to pay your bill, or I don't know. Yeah. But what about those people that say, I want to stand my feet. I don't want to live on credit. I want to live beyond my means. Is it possible?
It is possible, yes. I mean, your husband is a testimony to it now. It's possible.
Yeah, we tell you he doesn't want credit card.
Yeah, and that means he doesn't have a credit score.
He doesn't.
And that also means
credit score.
Okay, he has a credit score.
Maybe I've not. I No,
So if,
I'm
if
not
your husband
checking.
has never used credit before,
He
then it
has
means he
never
doesn't
used.
have a
And
credit
I've seen
score.
some people that don't have credit card as well.
Yeah, yeah, it is possible. Even me, when I came into the United States, I initially didn't want a credit card.
Mhm.
But then I was in my research, I found out that okay, I think I would want to have a credit score because of some of the things I might want to do in the future. That's
Yeah.
why I don't allow the payments to go beyond a month because I don't want to. I understand why I want to use the credit score, why I want the
Mhm.
credit card, but I don't. I also understand the downside of it, right? So it is possible to live without a credit card, but it happens to people who are extremely disciplined, number
Yeah.
one, and also financially to a certain degree comfortable
Yeah.
that they don't need to. For example, your husband, maybe he wants to get a brand new car, and a brand new car is £60,000. And he knows that, you know what, I don't have £60,000, but I'm going to wait for 8 months and save for it. Because I know I can work and get the credits and buy the car right? But I'm going to wait for 8 months. Many people cannot wait for 8 months. Many people will say,
You see,
no, no, I get it
one
now.
thing about him, one thing
Yeah.
about my husband, which I really appreciate, is that he's a dangerous saver. When he says, I want to, this is what I'm spending my money for, I want to buy this pen, I don't care how long, he will start saving for it. And
Exactly.
if an emergency comes, yeah, and you say, on the emergency come, well, let's use the money. You say, never. This is what I'm planning the money for. And that is my own different. If emergency come, I use the money. I don't care about what I'm saving
It's
for.
meant for it. So do you see what's happening now? Do you see what's happening now?
So you see, so
Yeah.
some people are like, and I have a sister like that as well. If she said, this is what I'm saving for, I want to buy this pen, and I'm not going to change my mind. I don't know now when we're growing up.
Yeah.
That is what about me. If I'm saving for this pen and an emergency comes up, don't worry, I'll just divert. That's it.
Yeah.
You
It's
know,
just
so
both of you are just two different people, and it doesn't
exactly.
mean you are necessarily not disciplined enough or he's more.
And
No,
you
it's
know,
just that
the
you're just
credit card,
different.
though, that credit card issue or debt issue, me, I'm so scared about it. And I
Yeah,
know
yeah.
some people, I don't know. Sometimes I ask some friends, I say, how you guys cope? How do you sleep and wake up with debt?
Knowing that there are debts on your head.
It's better I
You
just
know
know.
you
It's
you know
better
you
I
know
don't have it and just have peace of mind. Even though, yes, I really want to have what I want, but instead of me to put my neck into it, people say, I know life is a risk because that's what people say. They will tell you
Yeah.
life is a risk. Life is a risk, but there's some risk when you know your capacity cannot take it.
cannot
You
take
know
it.
you can't be doing night shift, morning shift, evening shift. Just stay on your lane.
It's not. I discovered that the way you just said, just stay on your lane. That's a very simple statement. But I tell you, in practice, many people struggle to stay on their lane. Many people struggle to tell themselves, I need to wait to buy this thing, or I don't need to be like. I mean, check out some nurses. You see a nurse going to work, she's seeing another nurse, and that nurse is coming with a 2026 Toyota Camry, and we are working together on the same floor in the hospital. But I'm coming with 2012 Camry. No, now is she working better than I'm working? No, I have to go and get it. That's where we miss it as human beings. And what we don't realize is that when you start thinking that way, you are beginning to become a product for those businesses because there are businesses funding these things. And go on YouTube, you see adverts, and they'll intentionally tell you you don't need to pay anything, just £11 per month. That's what they tell you, £11 per month. All of a sudden, it looks very small, but it is essential for the marketing. It's essential for making people to come in. They need more people, But if we can have a lot of immigrants as disciplined as your husband, trust me, the world will be a better place. The immigrant community will be a better place because people will begin
Not
to
only
realize that.
immigrants, Mr. Victor, it's
Yeah,
not only
yes,
immigrants, including
yeah, those who are
immigrants.
those who are
Because I've
financially
seen
not
people
disciplined.
whereby they will go on credit to get party. They will go and get credit card
Yeah,
to have
to watch
parties, to
football.
have
Yeah, a lot of
weddings,
things. Yeah,
to
weddings.
have
Yeah,
weddings, to have parties. And I'll be thinking that people will come to your party, they will eat and stand up. And if you're thinking that the amount of money you spend on party, this is me thinking because some people just
yeah,
said she's saying her own. That
yeah.
everybody have their own decision. Some people they like debts. And some people will tell you that they can't finish paying it until they die. When they die, they should come and ask their corpse. But that's not good. It's true.
Because that transfers burdens to their kids.
States.
Yeah.
Sorry, even in the States, some people will tell you is their father, their mother, this thing, their cops. They will, when they go, they let them come and ask of it. But why will you put yourself? The Bible says we should not owe anyone anything except to love. Yeah. You understand? So debt is anyway. We just, I don't know. People who just to stay on their lane. Trust me. Just be patient. Be patient. Be patient because this credit thing is not easy. It's not.
And check
easy.
it out. Most of those people who say those things, not to extend the conversation, but most people who say those things, if you notice, give them some time, and then go back to them and say, okay, so now you ended up saying, oh, after all, they should come to my cops to come and collect it. But check 3 years later, if they are alive, you will see that they are regretting it. You will see that they are regretting it. They will always regret it. But there is this feeling of, let me regret it first. But you will regret it. And they will come to you to ask for assistance by that time. And then you will have no choice than to help them with what you can afford.
It's true, because sometimes when people rely, they say they have job and they rely on that job and keep getting on debts. What if that job disappear?
Exactly.
Or something happen? Because people don't think anyway, some people say they have insurance will cover it. But what about people that don't believe in insurance? That's another one. Don't let us go
another
there.
One, yeah.
Yeah. So could someone have a good income, a good credit score, and still be financially overextended?
Yeah, you can have a good credit score means that you are using your credit frequently. It means you are buying things and you're paying back. You're buying things and paying back. So you're going to have a good credit score. And for you to buy and pay back early enough, it means you have a good income flow. And that income flow is consistent. So yes, that's true. It's possible. The only thing is just that when you are buying and paying back, your brain can begin to think about it like, oh, let me just add a little more. Let me just add a little more. Let me just add a little more. Then that's where you begin to walk yourself into the trap. So there will always be that button where the moment you are passing a certain range, you tell yourself, no, whatever income that is coming that I'm sure about, I cannot allow you to pass this stage. So let me stop here and wait till the next month again and roll over. Yeah, so it's possible, yes. You can be using your credit card, increasing your credit score with good income, and you'll be living okay.
Wonderful. So now we're going to look into mortgage. Mortgage freedom and financial burden. So let's talk about the big question. Is a mortgage a pathway to financial freedom? We know we said that. Or can it be a financial burden?
Mortgage can be a path to financial freedom if done properly. Okay. But for 90% of the people who go into home ownership as a path to financial freedom, they will not get to financial freedom. The 10% that would attempt to approach financial freedom are people who, from day one, they did not just get the mortgage because they wanted to live inside. They got it because it was an investment and they had a plan for what to do with the investment. They also had a plan for what to do if things did not go according to plan. Okay. So 90% of the people would not end up achieving any form of wealth through a mortgage. Yes, they're going to have a house where they probably rent out part of it or they live inside and then they're feeling okay, maybe they have peace of mind and all that. But a couple of years down the line, if their priorities changes, they would notice that they had made a wrong decision at the time they made the decision, especially those who are going into it now. But for people in the past, whatever wealth they got from their house, they were just lucky that the economy was in a better shape. Currently, the economy is not in a good shape. Yes, the economy for mortgages is not in a good shape.
I think it keeps going up like that, isn't it?
Yeah.
I saw a lady's, I think it's Tolu. I saw her this thing. She bought a property in Canada, and now she was saying that she didn't know the tax behind, all this one, because want to buy a house. My friend bought a house in Chicago. I want to buy my own. My friend bought a house in LA. I want to buy, the same here. Anyway, how can someone tell whether they are genuinely ready to own a home, or rather they simply qualifying for a mortgage?
This is a very beautiful question, and I think it's very critical. Now, knowing whether you are ready to own a home depends on whether you have done the mathematics to owning a home. Now, most times people who go into owning a home just consider the down payment. They want to pay the 10% or the 15% or the 20%, and then they assume that if you are paying £1,800 every month, that's okay. No, you're actually entering into a long-term relationship with a bank, even after paying the down payment. So you have to ask yourself, first and foremost, do I need a mortgage? Do I even need it? That's the question. Like, do I need it? Now, if you say you need it, why do you need it? Some people say they need it because they want to have that, just like you said, they want to say, I have a mortgage. When they say raise up your hand if you have a mortgage. Some people are like, you know what? I don't like the fact that I'm throwing away money to the landlord. I want to force myself to save. You know, when you're paying mortgage, you're not actually doing that. You're not saving any money when paying mortgage. And the reason why you're not saving any money, and I'm speaking specifically for this current market now, you're not saving any money for many reasons, but we can go into that. So you have to ask yourself, why am I getting a mortgage? If you have a very justifiable reason, why maybe the reason is because of family stability, then it means that you have achieved financial stability first. Because you cannot be going for family stability before financial stability. If you do that way, that means you're putting the cart before the horse.
Okay.
So financial stability first, your family will be fine, even though they are moving from house to house, depending on maybe your job, but they'll be fine because you have to reach financial stability before you go into mortgage. Now, I don't know about the UK, but in the US, average cost of ownership of a home is $400,000. Now, people look at that like, oh, $400,000, oh, I don't have it, but they say I should bring $80,000 as down payment. So I've gone to go and join Ajo to raise the money. Let me pay the down payment, and then and then for those who don't understand the meaning of Ajo, it's like a group contribution.
Contribution.
Yeah, let me get my down payment, and then I go and pay, and then next thing I start paying $2,500 every month, and I can afford $2,500 because I earn $6,000 a month. And then you think you will continue to, pay it down, and then you now own your house. No, think of it like this: 400,000 at what percent interest rate? If it's a 6% interest rate, in 30 years, your house, you are going to pay more than double the amount of that house. And that extra that makes up that double is going to go to just interest. It's interest to the bank. Yes, so you're going to be, if a house is costing 400,000 at 6% or 7%, you're going to pay close to $1 million in 30 years. So in my mind, I'm like, am I not better off paying maybe 70% of the value of this house in the beginning? If it takes me 10 years to save for it, just like your husband, if it takes me 10 years, I will save for it.
You're using my husband as a case study now.
Yeah, I'll save for 70% so that the remaining 30%, if they tell me I should pay 2,500, I can even pay 3,500. And in 4 or 5 years, I own my house. Why do I have to assume that paying 2,500 every month because the house is not even in your name? They won't even give you the title deed to that house. Maybe they might give you a temporary title deed just to trick your mind that you're the owner of the house, but you're not the bank is the owner of the house.
Yeah.
And if you mistakenly miss a payment for a considerable period of time, the bank comes and tells you that they are the owner of the house. And all the payments you have made before then will be gone. So owning a home, even though it has an emotional feeling towards it, in this current market, it is going to be a huge financial burden to people because income, your finances should be the thing you should consider first. Save up aggressively for a home if you truly want a home. Save up for it. As you are saving up, be dashing money to the landlord of the house you are renting. Because guess what? I don't know about the UK, but in the US, if I'm renting a house and something gets spoiled, I just need to fill a form and they will come and fix it. If I own a home and due to a thunderstorm and the roof caves in, the government is not going to come and tell me, oh, sorry, it was the thunderstorm that caused it. Let us help you. No. If that house is not properly insured, it means you're going to put, and even if you're insured, you might end up bringing out 40% of the value to fix the house. And 40% might be £15,000. And do you have that money cash sitting down somewhere? The answer is probably no, because you were thinking everything will be perfect for 30 years. But there are specific things in those houses that will definitely spoil within that 30-year period. And you have to be prepared for them. So I prefer, if I'm speaking to anybody who is trying to get a house in this day and age, save up aggressively. try to take your time, pay off your rent, and little by little save up to a point where you can get at least 50%, 60% of the value of that house. If you can do 100, do 100 and know that all you have to think about is just property taxes or council tax, and that's all. So anybody listening to this, if you know you are paying mortgage every single month, and they say raise up your hand if you own a home, please don't raise up your hand. You don't own the home. It's the bank that owns the home. You only own the home when you are done paying for it.
Exactly.
Same
Even people
any
that are paying
product.
interest only. Even people that are paying interest only, they will say. So what about people paying interest only without part payment? Because a lot of people will tell you they have a home, and at the end of the day, it's only interest only they are paying. I think you're talking from that side, whereby when something happens, the bank take the whole thing. You understand?
Okay,
but people that are doing part payments,
yeah.
You know, when they buy the property, they will say, okay, this property was, okay, like the figure you're giving, $400,000, isn't it? Okay, now $400,000, they work out the interest on top of that particular property. So what they now say, okay, instead of us to be paying that to be paying part of that $400,000,
let's pay just interest.
Let's just start with the interest. So that one is a bit risky. So I think people should be doing part payments and part interest. Or what 100%. Do you think?
And anybody who sells interest only is not doing you a favor. Yes, you're not paying a lot of money because
some people they do interest only. Even sometimes I'm so scared that why would people say they're buying a property and doing interest only? That's
the reason is because they want to have the feeling, satisfaction of home ownership, but they don't want it to impact their income negatively. So they tell the bank, you know what, postpone the capital, just be giving me only interest. Let me be paying only interest. And interest is small because 7% of 400,000 is let's say let me just say they're about $20,000. You know, it's $20,000. I'm not sure. 10% is $40,000. So 7% would be like let's say $25,000 thereabout. By the time you divide it by 12, that gives you somewhere around. It's still a lot. It's still a lot of money, right? Because 7% is every year. So, but even if you're paying only interest, you are in a worse situation because if the interest has to become a burden to you and you have not even touched capital, then it means that you're not even in a 30-year loan. You're probably in a 100-year loan.
Imagine.
Yeah. So
and when the interest goes up, it affects them as well.
It affects them, yes. If interest goes up, it affects them. You know, because it's interest only, and the bank is not. You're not clearing up the capital, which is also important. So if you're interest only, the bank is going to make it a variable interest where they can easily increase the interest whenever the market rate of interest goes up. They increase it, and then you still say, "Oh, it's just interest." And the plan of those people is usually when the house appreciates in value, I can just sell it, and I know that I only paid interest. I didn't, but I am saying to those people in this current market, you are probably not going to find a buyer. Because when we even say somebody is buying the house, do you know that what is actually happening is that the bank is giving another person mortgage to come and take the house. And when we say house is increasing in value, what is actually happening is that houses are becoming more expensive. So people are entering into more debt. So don't bank on house appreciation as a reason for you to be doing interest-only mortgage payments. Rather, forget about house appreciation. Focus on saying, I got this house. I want to pay it off as fast as possible and as early as possible. Let me know I own the house. Whether it appreciates or not, I own the house. Right? And then that's now the meaning of owning a house. If you're saying, I bought this house because of appreciation, you'll be doing it wrong because your house may not even appreciate. It might even depreciate. You know, the house have been appreciating for so long and people assume that houses will always appreciate. No. Very soon, we'll start seeing houses depreciate in value. Not even because they're not looking nice, but because there are a lot of buyers to push the value up. Buyers are now reducing. So sellers are now a lot. And then price has to come down. Economics, demand and supply.
That's a good one. That's a very good one. Thank you.
Yes.
Consider this way. Okay. My next question. My daddy, blessed memory, used to say something that sometimes some people have not been to the airport. They tell you what is happening in that particular country, maybe America or the UK or wherever country. So this goes to my next question. what should immigrant, because some immigrant, they have this mentality, oh, Uncle Joe in America, Uncle Joseph in Britain, oh, they bought their property. Because this is the mentality. When they hear people, oh, Uncle Joe will go to Nigeria and say, I bought my property. They didn't know Uncle Joe is on mortgage, he's on debt. Or Uncle Joseph in America build a massive property, massive house swimming pool, house gym, everything. They don't know all these things are debt. Yeah. I'm saying it. Yeah, I'm saying it. All these things are there. If you are not a politician from Africa, or if you are living in America or UK, they are debt.
They are debt. Yeah.
So what should immigrants know before applying for a mortgage in America where you reside?
The first thing immigrants should know is what is the current interest rate on that mortgage.
Okay.
It's not just about the cost of the mortgage. Let's keep the cost aside. Because the realtor doesn't even want you to know those things. They don't want you to ask too many questions. Just focus on how beautiful the house is. Focus on the fact that you now enter a house and you're holding the key. It's not like somebody is giving you key, but you're the one holding the key. Yeah. So the first thing an immigrant should be asking is, what is the interest rate on this mortgage? And then how much is this mortgage going to break down to on a month-by-month basis? Right? Now, how much percentage of that mortgage is my income? So if I earn 5,000, there is no way my mortgage, if I want to get a mortgage, my mortgage should be 2,500 per month. Because over time, it will increase by all means. So I need to make sure that if I want to own a mortgage, well, we have already talked about how to own a mortgage, but then just know the cost of the mortgage, know the interest rates, do the math, calculate what is going to look like at the end of the period of time when you want to pay off the house. Now, most immigrants should actually target 10 to 15 years to pay off their mortgage so that it does two things. It reduces the interest rate that they pay off on the mortgage. And number two, it also prevents them from paying more than the house is even worth in the future. Because some people will end up, the longer your mortgage takes to pay off, the more likely you're going to be paying more money into the mortgage than the house is worth. In the short term, yes, you might pay less than the house is worth. But the longer you pay, you end up paying more money than the house is worth. So know those things and then check your income. Be sure that you can afford to consistently pay off this mortgage. If possible, when you're going for the mortgage, 5-bedroom or 4-bedroom, plan to rent it out in such a way that the rent is paying off the mortgage and there is even change left that you can use to do other things, right? And also, don't bank on appreciation. If it appreciates, see it as a bonus, but don't bank on it. Look for other reasons why you're getting the mortgage. Not, I want my house to appreciate. Or the realtor will start telling you something like, I know a friend who bought. No, I don't know the friend. Realtor, you know the friend. I don't know the friend. I'm buying now. That friend bought when they bought. What is the current market saying? And is it beneficial for me? Look at my income. Look at this. Look at that. Some people will even tell you, oh, you don't need to do 20% down payment. No, you have to do that or more. Because anything less than 20%, they're going to top it up with an extra insurance on the house. Because if you pay less than 20%, then you become a red flag to the bank. So the bank is going to have to include an extra insurance in case if something happens to your mortgage payments, which now leads to you paying more payments for a house that you shouldn't have been paying more payments for. And that's why immigrants should make sure you have saved up above the 20% range. Who even said 20%? I keep wondering, who put 20% as the normal standard for down payment? Maybe it's the law, because the law was trying to help people to make sure they don't enter into too much debt. But now that law should be reviewed to 50%. And everybody should know that it means that mortgage is not for everybody. I know we cannot live under the bridge. We cannot live in shelters. But before you cross the route of renting to owning, don't think that because you can afford to pay 20%, then it means you are able to get a house. No. But however, there are some people that are in very strenuous situations where, by all means, they need a house. Maybe the renting system is because I'm saying this because I know somebody who had no choice than to go for a mortgage, and all they could afford was the 20%. And the person was lucky. A couple of years later, the house appreciated in value. So for those people, maybe you're in this market and you're thinking, I don't have a choice than to go for this mortgage. The way things are, it's okay. Go for the mortgage. pay even less than 20% if they allow you to pay less than 20%, but have a plan and understand the consequences of that below 20% you paid. And also understand what it does to the long-term value of the house. Because remember, the longer you pay, the more likely you pay more than the value of the house in the future. There is no way every house is just going to increase. That means in our children's, I mean, I'm sure in Gen Z, Gen Alpha, during their time, the least house that will be costing in the UK might be £1 million, which is going to be a big problem. That's why I know that the house will crash very soon.
Yeah. Anyway, you've covered my second question because I'm about to, I don't know if you have to say, I mean, you want to include a little bit of stuff in there. Because I was about to ask that before somebody commits to 30 years mortgage, what should they seriously consider beyond monthly payments? Because 30 years is a long day. I know if some people get married early and enter into mortgage, or maybe you're 20 years old and they have a good job. You see, 30 years, by the time they celebrate their 55th birthday,
they own the house.
They own the house, is gone. And some people, they thought they're going to finish their mortgage in 30 years. Unfortunately, they're still paying it in their 70th birthday, they are still paying mortgage. So what will you say to that?
So what I would say to that is, first and foremost, whether you are 20 and you have a good job, or you are 15 and you have a good job, or you are 30, your age is inconsequential to owning a mortgage.
Age is important because if you're in your 40, 50 and you say you are going into mortgage, by the time you had 25 years of paying your mortgage and 30 years, because some people will take mortgage, because the lesser the deposit, the more you start paying, isn't it?
Yes, the more you pay. Yes, I understand. Now, why I said that age doesn't really count, I said it from the standpoint of the bank is not looking at your age. The bank is looking at what you have.
In UK, they consider, because once you turn 50, or even once you start getting to that 45 and above, is an issue. They really look into, the scrutiny is going to be more, because they'll be thinking that what kind of job you're doing, are you really going to be able to avoid this mortgage stuff? But I don't mind it, because they have to look at all these things going on. Even though in your 30s, they still have to look at all your expenditures and all that going out. You understand?
I know.
In the UK. Okay, go on. Don't worry.
So what I'm actually saying is the other side of the curtain. That's what I'm talking about. The other side of the curtain. Now, in the front of the curtain, the bank is definitely going to check your age. They need to check that you're earning income. They need to check your credit. They need to check all those things. They're going to do all those things. And you know why they're doing it? Because they don't want to carry a lot of liability. They want to make sure that this person that we're giving this house can afford to pay and is young enough to work and pay off, right? That is what is in front of the curtain. But behind the curtain, the bank doesn't really care about the age of the person. What the bank cares about is just the fact that this loan we are giving you, we need to make sure that we protect ourselves, so that even if you get to a point and you cannot pay, we can easily sell and make money off this house.
That's true.
And then we get away with you, because that means you're a bad business, right? So the person who is coming, to get the mortgage, as much as your age is important, which is, I'm calculating, I'm 20, in 30, I'll be 50, I'll still be young. Even if you are 20, before you go for a mortgage, the basic thing you must consider is your income. How comfortable would you be getting a mortgage and paying this amount of money, and how fast can you pay it off? Paying it off fast is not doing the bank a favor, remember. The bank does not want you to pay it fast.
It's true.
Because the longer, the more interest. That's why the bank is checking the age. They want to make sure that this person can even do 70 years and will still be able to pay. Right? So it's the individual I'm talking about. The bank is going to qualify you if you are young, but you know yourself. You know that that the bank is qualifying me does not mean I'm truly qualified if I check myself. So I want to make sure that I am getting a mortgage I can afford. And of course, there's a lot to consider, like jobs and all those things. But if on average housing costs £200,000 in the UK, is on average, right? I'm sure there are places where houses cost 120. It doesn't look so good. I'm just saying. There might be some places.
That would be home under the hammer. If you say 250, I'll say, yeah, maybe somewhere in the north. Yes, somewhere in the north,
Okay.
or somewhere in the east, somewhere. Yeah.
Okay,
East
fine.
of England, north of England.
Yeah, I'm talking about
200,
houses
yeah,
that
200K.
I'm talking about houses that maybe they need a lot of maintenance to get them up to standard. So
Yeah,
they might
those
not
are home under the hammer. You can get home on auction. You can get those, auction, yeah.
Exactly. There are older houses that have gotten bad, So you can decide to target them and then save money that you used to touch the house up, put the house in order. Now, it means that your mortgage is not the standard average mortgage price. You got it cheaper and you took extra money to put it in order. Then you live there. But remember, those are people who their work does not require them to be in a particular place.
Yeah.
They probably can live anywhere. So it's not for everybody. But I'm saying as much as possible, you try to make sure you don't just go for a house because you qualified for it. No, you go for a house because you are looking at your own personal finances. And even though the bank is going to check your personal finances, the bank is also desiring to make sure that interest, they collect it. And they collect as much as possible because the capital is useless to the bank. It's the interest that matters. Remember, for banks, the capital is not even their money, it's somebody else's money. So they need to make sure that they use that money to generate as much interest before the person comes for it. So if you are going to be the person to give them the interest, they need to lock you in. In fact, let me even give you a deeper dive. Whenever a bank approves you on a mortgage, right, that loan you think they've given you, which is maybe £250,000 or whatever, immediately the bank signs you up for that loan. The bank packages that loan into what they call mortgage-backed securities, and they sell it to investors. So instantly, the bank removes the liability from their books and gives it to investors. Now, whenever you pay your mortgage with that's why they collect interest first, because they need to pay those investors interest. Those investors are not interested in capital. They're interested in interest. That's why they collect interest first in the first 10 years before they start touching your major part of your capital. So the bank needs the interest as much as possible before they start going into the capital. That is why they will approve you if you fall into their own quota, their own, analysis, whatever they analyze for you. But as a person, you need to make sure that you are not just getting into a mortgage because you think you can afford the monthly payments. No, you are getting into a mortgage because you have a timeline you want to pay it off. You also have an amount of money that can make you hit that timeline. And even if you miss the timeline, not by another 10 years, maybe by another 2 years, so that you fully own the house and you can determine whatever you want to do with your house. Yes.
Well done. That's a good one, because I don't think a lot of people think about timeline, because they just enter into mortgage. Yes, I want to prove that we're not nearly, we too, we have house. We too, we bought property. I think that is the majority of people, that's their mindset. That's their mindset. Yeah.
And I totally understand. It's natural human desire to want to feel comfortable.
No, it's good to own a home, because at least you pass it on to the children, and that's fine. But
remember when we started talking, the children, they might not even need it.
No, not the house in this country. But we're talking about Africa. That one, they don't care about those house in Africa.
Yeah.
Okay, a question is coming to me. Here in the UK, as an immigrant, or maybe old non-immigrants that you don't have any legal issue, in the country. The government do support by giving them houses if they have one, both the old and in the past. So how is it like in the States? Because not everybody have this mindset that, I just want to go and put my neck into mortgage. But some people might say, okay, I've heard that the government do support, they give them housing. So what about if people are looking into that direction and said, okay, I want to go into government housing instead of putting my neck into mortgage or even renting?
Yeah, the government of this particular part of the world, before they give you anything, you are going to fall within the spectrum of certain criteria. So anybody going for that, they'll check your income.
Of course,
you can't be earning comfortably and be wanting government to give you house. It's not going. There's no correlation, right?
I don't know about that. I don't know about now. But
there's actually no correlation. There's actually no correlation.
What about UK? But with one thing I know with UK, I don't know about the system now. Trust me.
Yeah.
once you, because things happen to people, even people that owns homes, things happen to them that, their mortgage is gone, their home is gone, nothing, they fall back to the government, and the government have to rehouse them. You understand? But
I understand. I understand. You're correct. That's exactly what I'm saying. I'm saying that for the government to rehouse you, or for the government to give you, it doesn't mean you are the owner. It doesn't mean you are going to be the owner. You're only going to.
I mean, governments are.
Of course, they have those programs here, but you have to fall within the category of the people you mentioned, which is something must have happened, and it impacted your income. So you stay there temporarily until you can move on. There are options like that here too for people.
Yeah, because I know. I think I know somebody that when he got to America, is the government that is. I think he's living in the government house.
Okay.
Those people that came with the green card. No, yeah. So I think with the green card people, the government can give you housing.
Is it what they call shelters? Because we have shelters.
Shelter is for the elderly ones.
No.
They call it housing council housing here in UK here.
Okay.
But I don't know what
we call it shelters.
Okay, it's the shelter they call it. I don't know. I didn't do my research, don't worry.
Yeah.
So what are the hidden costs of home ownership nobody talks about? What mistake do first-time home buyers commonly make when taking out a mortgage? I think we've dealt with that, isn't it?
Yeah. Let me just mention a bit of the hidden costs. There are things like maintenance. Maintenance is one thing.
Yeah,
property tax can go up due to the current value of your house. And insurance, if your insurance is helping you a lot to fix things in your house, then they're going to increase your premium. Some of those hidden charges and costs, things can get spoiled and you have to fix it yourself, especially if it falls outside of the insurance. And if we say insurance is doing everything, at the end of the day, you'll be paying a very high insurance. So that in itself is a huge cost, But I would prefer not to even work with insurance. Because I know that insurance, the insurance agency, they are a whole different problem in this part of the world, depending on what they are insuring for you. So you have to, as much as possible.
It's when you want to claim that they will start asking you questions.
Exactly.
When they are collecting your direct debit.
When they are collecting, they are not going to, when you come to claim, then they start asking a lot of details. So you just have to be careful about the additional costs. They have to realize that your mortgage payment is not all there is to owning a home. There are other attached costs that come up along the way. And that's why it's a long term, so that you don't think about the long term. You just focus on, I'm just paying 2.5. But in the third year, fourth year, fifth year, your cost goes up and then you are shocked. You shouldn't be, because that's the whole idea.
I think people should really look into the tax and other stuff. Those are some of the hidden costs.
One thing we didn't mention is one advantage that makes people to want to own a home is because they tell you that there are tax advantages to owning a home, like more like tax refund. Like, for example, if you have when you are filing your taxes, there are some refunds you get because you own a home. Maybe you expenses on your home. But we can go into that topic in a different conversation. But when we say tax refunds, you pay the tax. They're just giving you back some. It's not as if it's free money. So I wanted to just mention that.
Okay, thank you. Can renting actually be a smarter financial decision for some people? If so, when?
Renting is always a smart decision. And when I say renting is a smart decision, not renting, you can't be saying, I don't want to own a mortgage, but I want to rent a house that is £4,000 a month.
That doesn't make sense.
Yeah, then it begins to become an unwise decision.
Or dollars, yeah.
Yes, because you can actually get a mortgage for less.
Yeah.
And then save that extra for all these repair costs we're talking about, right? So if you're renting, what renting does is that renting is like, I want to discipline myself for a while to even save up to be able to. So you can't be saying you are renting and you're renting 4,000, but you're disciplining yourself. No, you rent in a place where you know that you are intentionally not paying so much, but you are getting all the benefits of renting whilst you are saving for your own home. The goal is not for you to rent. Some people think that when we say rent first, they think it's, if I rent all my life. No, we didn't say rent all your life. We are saying rent for a season and save. The renting is like a planting season, so that when you are reaping, you have saved for the mortgage. So renting is always a smart decision. However, renting in smartly, not just renting because it's rent. Yeah.
That's a good one. Thank you. So what are the financial risks here of having most of your wealth tied up in your primary residence?
First and foremost, your primary residence is not even supposed to be an investment. It should not be seen as an investment. A primary residence where you live is not an investment, because I know it only becomes an investment when it is bringing in income. An investment is anything that brings you income. Yes. So if your primary residence is not bringing you income, then it's not an investment. Your primary residence is your primary residence. Find another reason why you own it, not for investment purposes. I know people say, I can just sell it. If you sell it, you have to go and live somewhere. So are you selling it to go back to maybe your home country, or are you selling it to go and, because by the time you are selling it, every house in that area will become valued at that amount you sold your house. Is a natural law. So you are either going to sell it and then downsize. Maybe as a young couple, you got a house, after 30 years, your children are grown up, then you sell it and then downsize to a condo or downsize to a 2-bedroom instead of a 4-bedroom. Then that begins, that's when it looks like an investment. But you see, it's 30 years and you have to downsize, sacrifice to see it like an investment, right? But your personal home is not an investment. I would rather prefer to have 1 or 2 homes as mortgages that I've rented out, earning me income. That's an investment before I now get a mortgage, right? As a personal home, which is not an investment. So those 2 other mortgages can be financing my personal mortgage. You see, that's how to think that is business, not your personal home being an investment. It's not an investment.
Wonderful. That's a good one. That's a very good one. So if someone, own a home but has a little saving or investment outside that property, are they really financially secure?
Your financial security depends on the emergency that you can undertake when something happens. So that is why, as much as possible, if the person is still building their lives, you have to make sure that your liabilities are the potential for you to run out, in quotes, if something happens to you, should be extremely low, meaning you need to have a lot of cash deposits as emergency and also a lot of assets earning you income. That is if you are in a position to, right? So if you security is not just having, oh, I have some money in the bank, oh, I have 1 or 2 stocks I bought. That's not financial security. Financial security is I have enough stocks, or I have enough properties, or I have enough assets that can fund my life and can also get me out of any trouble, depending on the degree of the trouble, right? So that's how it works. And that's why some people say things like, people who are not living within their means, one emergency can send them back to zero. So you don't want to live on the edge just because you wake up every day, you go out and then you drive. You can wake up, go out, and then you have an accident and then you lose the car. Now you have to pay the insurance, pay the company, and your insurance tells you that, oh, if we pay it for you, your insurance is going to triple. Okay, so how are you going to manage it? But if you already have income and assets in different places, those things don't get you unawares. That's why at the beginning, below your means and build strategically up to a point where you now know you have enough assets that can fund anything that comes up.
That's a good one. Well done. Thank you. Okay, for immigrants trying to build wealth in America, how should they think about investment such as 401k, as you call it in your area there, IRA, and taxable brokerage account alongside home ownership?
Okay, thank you very much for this question. The first thing is your 401k.
401k.
The first thing is your 401k, but not everybody has a 401k because it depends on the job. Some jobs don't have 401k. So let's start with 401k. The first thing is 401k. If your job offers you a 401k, please take it. Can
you expatiate on 401k for people that don't understand what 401k is?
401k is a retirement plan that is employer sponsored.
Okay.
Right. Your employer sponsors your retirement plan. In Canada, they call it RRSP, retirement something savings plan or something like that. RRSP, right? So your employer is contributing into it, you are contributing, and the money is being invested in that bucket over your working life up until you are 63 plus. Now, when you are 63 plus, you can now withdraw and just pay tax. Remember, when you were contributing, they were not collecting tax. because they contribute before tax, right? So in your retirement, you pay tax, but that's the beginning, right? Everybody whose employer gives you a 401k, please take it. It is the foundation. Don't even say my employer, no, keep it, I'll go and do something else. No, take it and try to max it out. When they say max it out, maxing it out means there's a specific contribution for the year that you can put inside. Try to make sure you put that full contribution before you do any other thing. In fact, some Jewish people, Jewish people are actually like very sound in finance. They'll tell you that you should even contribute twice of what your times 2 of what your employer is contributing.
Yeah.
And then invest it, because it's like it's so foundational that people shouldn't decide not to do it if they have the opportunity. Now, if you don't work in a place where they don't offer a 401k, some people work like they're like, they call them blue worker workers, like the working class. They have 403b. Take it. That's the alternative. Take it. Then if you don't have a 403b, then in America they have what they call Roth IRA or traditional IRA. Let us talk about traditional IRA. Traditional IRA, which is individual retirement account, is for people who don't have a 401k and don't have a Roth or a 403b, but they still want to contribute money that would not be taxed in the present, and they can invest it up till their retirement in 63. That is called traditional IRA. Then the next one is Roth IRA. Roth, R-O-T-H, Roth IRA. That one is now your own personal. In case you don't have a 401k, you don't have a 403b, and you're not doing a traditional IRA, then you should do a Roth IRA. Now, Roth IRA is your own personal one. That one, you are contributing money that the government has already taxed, but you're still putting it inside that bucket, and you're investing it up to your retirement. The difference is that all the money you invested in the future is tax-free. But in the present, when you are contributing, you are paying taxes, right? Now, the question is, okay, Victor, what if I want to do 401k and Roth IRA? You can do both. If your employer offers you 401k, you can also do your Roth IRA. And why it is encouraged to do both is because it is foundational. That should be the first level thing you do before even thinking of mortgage, before thinking of brokerage, before thinking of any other thing. Now, once you have done that, the second thing is now to save for emergency. You don't want to go and be withdrawing your investments when an emergency hits you. So you want to save for emergency. And some people will say, if your monthly expenses is like $3,000 or $2,500, that $2,500, try to use 1 year or 2 years to save like times 6 or times 9 of it in an account. So that if anything happens to your job in 6 months, you are not worried. That money is going to be taking care of you every month up until you get another job. And this thing I'm telling you, many people don't do it, but it's only when the job actually, because nobody believes they will lose their job. I mean, you can't be getting a job today and be believing you will lose it. But what will make you lose it might be something that you don't even see coming. It might just be that they change supervisor and that person doesn't like you, and then the person takes you off, right? So you end up losing the job. So you want to make sure that you have saved up emergency and your Roth IRA or your retirement accounts are still okay. And then that emergency fund, you save it in a high interest savings account, not just in a normal bank account, a high interest savings account, because a normal bank account will give you below 1%, but a high interest savings account will give you 3% and above. Now, it's very small percentage, but it's necessary to be getting growth because the emergency might not happen in 2 years, 3 years. Let it not just be losing money. Let it be gaining that 4% or 5% every year. Yes. Then the next thing is now investing in maybe stock market. That's one thing people don't like. People don't understand, how will I be investing in what I cannot see? Like I said, you cannot see wealth. So investing in the stock market is a very excellent way of building your wealth. And you don't have to buy individual stocks. Like you want to buy Apple, you want to buy, some people bought and they are happy today. But if you're the kind of person who you don't like to take a risk, they have what they call exchange traded funds. In the stock market, it's called exchange traded funds. Those ones are like a basket of different companies inside. I don't have to buy one company. I buy the basket. That way, I'm not taking too much risk, but I'm still in the stock market and I'm benefiting from the growth of the stock market. The people that are taking a lot of risk are people who are buying Tesla, Apple, Amazon, If you have extra money after buying the basket, then go and buy those ones. If you want.
Do you know what is inside the basket?
Yes, you know what? Yeah, you know what's inside the basket.
So give me an example.
An example is VOO is a code. VOO. Another example is SPY. Another example is IVV. Now, these three baskets are different companies that created the same type of basket, but they are managed by different companies. And inside those baskets, they have 500 top performing companies in the US inside the basket. So even if you invest $100, that $100 will be spread across 500 companies. It looks like, wow, that's small money. That's why it is low risk. That's why you don't have to come tomorrow and they'll tell you that the money is gone because the market went down. So over time, you keep investing and it keeps compounding for you. Remember, there is retirement funds, there is emergency funds, then there is exchange traded funds. Then after that, you can now start saving towards your mortgage if you plan to own a home. But don't jump this foundation before going for mortgage in the US.
But how about people that don't know this foundation?
Then they are working, they need to know it.
Power.
Knowledge is power, yes. They need to know it.
Okay, what about people in the UK? Can they invest in this basket as well?
Yes, 100%. It's on the stock market. They can access it. Yes, they have trading 212. They have different kind of trading.
Okay, so those are the baskets you're talking about. I know trading 212.
Trading 212 is the application where you can buy the basket.
Yes. Buy the basket. Okay, I got you.
Yeah,
I got you. All right, thank you for that insights. After everything we have discussed here, when can a mortgage become a pathway to financial freedom? And when can it become a financial burden? I know we've talked a lot.
Yeah, I know. So a mortgage can become a pathway to financial freedom if you see it as an investment, not as a personal home.
Okay.
Yeah. Financial freedom is built by buying investments, buying assets. Yes. So, but a building that you live in is not an asset. So once you see it that way, I am buying this building. How can I make it an asset? By renting it out, or by turning it into an Airbnb, or by running a business inside. So the building is helping me to earn. So it has to generate income for it to be a path to financial freedom. Once it is not generating income, is a path to financial burden.
Okay, what about, we did mention buy to let before we finally round up this discussion.
Yeah.
So what about buy to let? Is it possible to buy a commercial property and use it to stand for a residential home? Like if you have a commercial property before you own a home, yeah, is it possible to use that commercial property to stand for that your residential home?
It's possible. It's possible that, but when
you don't have a capital to buy that residential home, so is it
means you go to a bank to borrow money and use the commercial property as the collateral, right?
Yeah, collateral
to buy off the home once.
No, to buy a home at once. Yeah, that's it.
Yeah, it's very easy. The bank is going to be happy to give you the loan to buy the house as long as the commercial property is worth ×2 or maybe ×1.5 of the value of that home.
Of the value of that home.
Yes, they'll give it to you because they know that if you don't pay that money back, that commercial property, they're coming for it.
It's gone.
Yes.
Okay, because I know we did mention that, because some people say, okay, if I don't have a home, but I have a buy to let property that it's worth using for collateral for the other property.
That's an excellent. That means they probably have an LLC that is running the commercial property. And so when they go to a bank to borrow money, they just tell the bank, I have a commercial property is worth maybe £1 million in total value, even though they've not sold it yet. They're just using it for business. They are still even paying it. As they are collecting their rent from commercial property, they are paying off the loan, the mortgage there. But then they can still go to a bank and borrow on it, and then buy off that house. Now, it just means that while they are paying off the commercial property's mortgage, they are also paying off the loan they've gotten from the bank. But then that loan bought off the house at once. So they can focus on the two loans without worrying about paying a separate mortgage payment for the house. But it's you can see it's a bit complicated. The person has to be very careful to make sure that whatever you are getting from that commercial property is enough to fund both the payment of the loan for using buying that mortgage and the commercial property if you have not finished paying it off. Because if you have to now use fresh income to pay, if something happens to your income, the bank will tell you, okay, let's come for the commercial property. You're now defaulting. So, yeah.
Oh, wow, that's a good one. Thank you. So, our closing question.
Yeah.
If you could give one piece of financial advice to immigrants and anyone hoping to build long-term wealth in America, what would that be?
It's a couple of advice.
It's a lot, isn't it?
Okay. But the first thing I'll just say is when you come to this country, or if you're already in this country, don't compare yourself with anybody.
That's the key.
The Bible even says that they that compare themselves with themselves are not wise. Don't compare yourself with anybody. Yes, I know there is a desire to compare because you don't want to look like the one who is lacking behind, who is not meeting up. No, there is no measurement for what meeting up is. Just realize that you came on a journey, and your journey is yours. You're on your lane. So if you have a plan, other people might be living their own lives and living their own plans out. Work with your own plan. The only reason why you should change your plan is when the plan is no longer aligned with your personal goals. Not change your plan when it's not aligned with your friends' goals. No. So work according to plan. But sometimes you might be talking with a friend and a friend tells you a strategy that makes sense. It's okay for you to change your plan and adjust it. But you're not adjusting it because you want to do what your friend is doing. You're adjusting it because it makes sense. So please don't compare yourself. Then secondly, live below your means. The Western country is a country that is credit based. They are not, the banks are not happy. Financial institutions are not happy when you're not running on credit, when you don't have a lot of credit everywhere around you, because that is what is powering them. A bank can literally crash if everybody owing the bank stops paying their credit, stops paying. They can crash. Banks don't even keep money that you keep with them. The law in the US allows banks to loan out 100% of deposits that they receive. Right? So anytime you ask for money, you go to a bank and you want to, you open your app and you're looking at your bank balance, it's just figures. It's not real money that is sitting in the bank. When you click, I want to withdraw, there are processes that the bank goes through to make sure that money is available at the time you are requesting. But everything is in seconds. But then the actual money is not sitting in the bank. It's sitting in people's mortgages. It's sitting in investments that people have collected from bank loan to go and do. And the bank is making money from different routes. And that's why they are doing well as banks. But if everybody stops paying their loan now, banks will start crashing immediately. And it happened. Remember 2008 market crash?
Yeah.
It happened. Yeah. And 2022, it also happened. So we have to be careful. Live below your means and build your life based on your own pace. Of course, connect with people, get the right information, try to make sure that you're on the right path, but don't be trying to be like other people just because they seem to be doing well. All of you didn't come at the same time. And even if they say, on your mask, get set, go. Some people will not run the same way some people will run. So we're all going to arrive there by God's grace, but at different times and at different seasons. That's my recommendation.
That's a good one. The personal one for you. If you could go back to the beginning of your own financial journey in America, what is one thing will you do differently?
I will do what your husband is doing. I won't take a credit card. I'm telling you. Your husband, your husband should even be the one you should be interviewing, not even me, sir. I won't take, number one, I won't take a credit card. Number two, I won't take, I will drastically reduce anything credit around me because I have fully understood it. And I'm like, Victor, damn, shouldn't have taken this, You will always get to that place where you're like, damn, I shouldn't have taken this. So if I could go back, I would make sure that I build my asset base first before I start stepping in, because you need the credit at some point if you really want to build a business system and all that. But you definitely don't want to do it in a hurry. If not, you become a product for the banks.
Well done. Thank you for that insightful knowledge. Owning a home is a great goal, but financial freedom is even greater. Do not rush into a mortgage simply because home ownership is called the American dream. Understand the numbers, knows what you can afford, plan wisely, and make decisions that give you peace, not
pressure. To my wonderful
100%.
guests, I'm so grateful for your insights
My pleasure.
and everything we have shared, and I pray that God Almighty will help us all in this journey.
Amen. Amen.
In this journey of is it mortgage, non-mortgage, renting, owing, everything, credit card, business, investments. And that is that from us all today. Thank you, everyone. God bless you.
Thank you.